Welcome to the GFU Forex trading course. A wedge is a chart pattern that has two trend lines converging at a point called the apex. As we can see, this pattern consists of two trend lines that move in the same direction as the channel gets narrower until one of the trend lines gets broken. The resulting shape forms a gradually narrowing wedge. The upper trend line acts as the resistance, while the lower trend line acts as the support. This pattern can be used for the continuation and reversal of trends in the market. The wedge pattern has three important parts. Number 1, the two converging trend lines. Number 2, the declining volume is the price movements in between the upper and lower converging trend lines. Number 3, the breakout zone from one of the two converging trend lines. The wedge chart patterns can exist in two forms on the price chart. Number 1, as a rising wedge. This suggests a bearish interest. Number 2, as a falling wedge. This suggests a bullish interest. How can we professionally trade the falling wedge chart patterns for the continuation and reversal of trends into an uptrend in the market? To implement the falling wedge for the continuation of a bullish trend, Step 1. Look out for a strong bullish trend. Step 2. Look out for a bearish pullback resulting in a falling wedge. Step 3. Patiently study price transition within the two converging trend lines. Step 4. Ensure price breaks upward above the upper trend line of the falling wedge. Step 5. Ensure the price breakout above the upper trend line is a strong bullish candlestick. Step 6. Buy the bullish candlestick breakout of the upper trend line. Step 7. Place your stop loss at the low of the last bullish swing that led to the bullish breakout of the pattern. Trail your profit upward. For the reversal of a bearish trend into a bullish trend, Step 1. Wait for a first strong bullish breakout of the chart pattern in a downtrend. Step 2. Watch out for a retest of the broken upper trend line. Step 3. Patiently wait to see an upward bullish rejection from the broken upper trend line. Step 4. You can proceed to buy the close of the bullish validation candlestick above the broken upper trend line of the pattern. Step 5. Place your stop loss below the lower band of the falling wedge that is vertical to the bullish breakout point. Trail your profit upward to target two risk-to-reward ratios. Alternatively, you could take the measurement objective from the starting point of the wedge chart pattern, that's the support of the descending wedge pattern, and then measure the vertical distance up to the starting point of the upper trend line, the resistance. Then replicate the measurement value upward from the breakout zone here in order to forecast the potential bullish price movement. How can we professionally trade the rising wedge chart patterns for the continuation and reversal of trends into an uptrend in the market? To implement the rising wedge for the continuation of a bearish trend, Step 1. Look out for a strong bearish trend. Step 2. Look out for a bullish pullback resulting in a rising wedge. Step 3. Patiently study price transition within the two converging trend lines. Step 4. Ensure price breaks down below the lower trend line of the rising wedge. Step 5. Ensure that the price breakout below the lower trend line is a strong bearish candlestick. Step 6. Sell the bearish candlestick breakout of the lower trend line. Step 7. Place your stop loss at the high of the last bearish swing that led to the bearish breakout of the pattern. Trail your profit down. For the reversal of a bullish trend into a bearish trend, Step 1. Wait for a bullish retest after the first strong bearish breakout of the chart pattern in an uptrend. Step 2. Watch out for a retest of the broken lower trend line. Step 3. Patiently wait to see a downward bearish rejection from the broken lower trend line. Step 4. You can proceed to sell the close of the bearish validation candlestick below the broken lower trend line of the pattern. Step 5. Place your stop loss above the upper band of the rising wedge that is vertical to the bearish breakout point. Trail your profit down or target 2 risk-to-reward ratios. Alternatively, you could take the measurement objective from the starting point of the wedge chart pattern, that's the resistance of the ascending wedge pattern, and then measure the vertical distance down to the starting point of the lower trend line, the support. Then replicate the measurement value down from the breakout zone here in order to forecast the potential bearish price movement.